Hey, what's up everybody, Zach's back, and today I want to go over the debit spreads and credit spreads. And sometimes a credit spread is known as a vertical spread, especially on Webull. So if everybody wants to bring up their Webull, or whatever broker you use, but personally I'm going to use Webull. I really like the interface and the research tools. And I'll put a link in the description below. If you don't have a Webull and you'd like to follow along, go ahead and download that, sign up, and that would be great. So you can really see what we're doing because every broker's user interface is different. Well, anyways, let's jump right into this. So, right now I'm looking at Tesla. Tesla is obviously one of the most popular stocks right now with some really expensive premiums. So, if you want to take a position on Tesla, but you might find yourself don't have enough available capital to take one of those positions, including myself, because these are quite expensive. Let's look at the chart real quick, and this is on the day chart. And so, for example, if you want to buy 100 shares, it's going to cost you $85,000, and that's very expensive. So let's go. Look, we're going to decide. We still want to be bullish on Tesla. We want an exposure to a decent amount of shares, and we want long term, so not so risky. So let's go ahead and look at the long term. Now keep in mind, these are going to be very expensive normally, because the longer the term, the safer it is, you could say, and the premiums are going to be very expensive. So let's scroll down to Tesla. The market price right now is $852. Let's say this, and this is 349 days until expiration. Expires in January of 2022. And today is, this is February of 2021. So that's over 1 year. This is a leap. Leap is just long-term over 1 year option contract. So let's say we want to do $1,000. Let's just make it simple. $1,000 strike price. And remember, a quantity of one contract is going to be for 100 shares. Now this only has a delta of 56, so this is exposure to around 56 shares of Tesla. But if you see, pull out the handy calculator, 56 times 852 about is $47,000. So this is still, if we just buy the common stock, this is still going to be really expensive. So usually people want to buy these option contracts, and it is going to cost us, you see the limit price down here. Well, the last price this contract sold for, and this is on Friday market close, was $197. So remember, $197, and the limit price, of course you can look at the bid and ask. Webull is suggesting put a limit price of $198. So if that is times 100, that is going to be $19,860 for this contract. Now, first of all, this is a pretty good deal because remember, the delta is at 56, so we have exposure to 56 shares of stock. And usually if you just buy Tesla stock, it's going to cost you $47,000. But here, it's only going to cost us for the same exposure of $19,860. So almost $20,000, and of course we can change the limit price and try to get a better deal on that, which we would do. But we don't want to do that because that's a lot of money. And even for myself, I don't, if you had $1 million that you're playing with, I think would only be 5%. I think that's pretty reasonable. But a lot of people I see suggest, and including myself, suggest 3 to 5% per position. You don't want to over leverage on Tesla, and especially if you're holding ARKK. They have like different ETFs with Tesla inside of this ETF, so you're going to have a huge exposure to Tesla. But anyways, we don't want to do that. What we want to do is find a cheaper way to be bullish on Tesla, instead of just buying one share for $800 or whatever, or buying some of these very expensive $20,000 per one contract. And if we get 2, 3, 4, 5, I mean, we're talking about $100,000 right here for only 5 contracts. That is very expensive. So this is what we're going to do, guys. Now remember, sometimes this is called a vertical spread or a credit spread. So what we're going to do is go into the options and click, instead of this is the strategy up here on Webull. Now, if you have a different broker, you're going to have to find out how to do this. but essentially on Webull is right here is vertical. That's what we want. We want a vertical spread. And here is the 1000/1005. Now we can adjust this later, and we want to buy it. So make sure it's green. So there's going to be two legs to this. Now let me go ahead and explain what a vertical spread is. A vertical spread is if you buy a call and sell a call at the same time for different strike prices. So pretty much, let me pull up this picture, this graphic, so you can get a better idea. I just went on Google and looked for a picture. I didn't make this, but here we can see that, and this is just an example. I don't know what stock this is, so it doesn't matter. Stock price of $135. So that's going to be a strike price. So say we buy and this is both calls, okay? So we buy the 135, and then simultaneously we're going to sell the 145. So we're going to have this, and this is why it's a vertical spread, because it's spread in between these two prices. That's what it's called. Now, it looks like the break-even price is this green dotted line. Is in this graph, it's where the pink changes to the green. In the middle, that's going to be your break-even, and this looks like it was $141.47. So this vertical spread cost the investor will be 41.47 minus 35, so that would be $6.47. So that's how much it costs, because you have to pay for these contracts, obviously. We don't have to pay for the price of the cost of the stocks or anything like that. And if you don't understand this, you need to go back and learn what a normal call, put, and stuff like that is. But anyways, so this is going to cost $6.47. So $6.47 plus the 135. So that's why we have a break even of 141.47. Now, if the stock price doesn't get to the break even, then we're going to lose money. So it's going to be in this pink. Now the maximum, we have a maximum we can lose, because remember, we're selling the call. So we're going to have a maximum we can lose. Also, we're buying the put and selling the calls. So we're going to have a maximum that we can make. So keep in mind, this is going to limit your upside. It's going to minimize your downside. And overall, it's going to be a lot cheaper. So that's basically what it is. I hope I did a good job of explaining that. Let's go into it on a real world example of Tesla. So basically, we're buying the call at $1,000 strike, and then we're selling the call at $1,005 strike. So this is only going to cost us, and it's suggested $1.35 per share. So totally is $135. Now keep in mind, before, just the bull call was almost $20,000. So this is going to be a lot cheaper. Now, also, if we take a look down here, it says our max loss is $135, so that's how much we paid for this. That's the most we can lose. And then the max profit is going to be $365. All right, so that's as if it passes our break-even is actually going to be $1,000 plus $1.35, so it's $1,001.35. Now, expiration is 349 days, so we have a long time for Tesla to hit $1,000. And if it goes past $1,000 to $1,005, that's the most money we can make, is if it goes up to $1,005. We're going to make our $365, and that's it. If it goes to $2,000, $3,000, $4,000, it doesn't matter. We're not going to make any extra money. So this is limiting your upside. But at the same time, it's limiting the price, and it's limiting your loss, potential loss. So that's interesting. So again, let's take a look at just a single option. This is the bull call. You're at $1,000. Single option we want to buy. Okay. So remember, this is going to cost us almost $20,000. The maximum loss is going to be $20,000, because that's what we paid for this contract. And then the profit is unlimited. That means if Tesla goes to, this is the strike of 1,000. If it goes to 1,000, and our break even is going to actually be 1,000, and actually you can look at the break even, it's going to be 1197.10. So basically, it's just going to be the price that we pay plus the strike. So that's going to be our break-even price. And it's 40% to break-even, 47%. or sorry, 40%. So that's a really expensive, but you can make a lot of money, because if Tesla goes to 2,000, 3,000, or 10,000 in this year, you know, it's just the higher it goes, the more money we're going to make. So really, it's going to make a lot of money. But this is very expensive. But like I said, even sometimes I don't want to take positions in Amazon, different types of leaps, Tesla leaps, or anything like that are very expensive. We can save capital and we can still get exposure. So let's go back to this vertical. Let's take a look at their graph. And let's go back to the 1,005. Now this is a very, 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 let's see, go over to graph. It is a very short width. The width is only $5. So here is the graph that you can see, and it looks similar to the example graph. So basically, this is down here is the maximum that we're going to lose, no matter what the price of Tesla is. If it's less than our break even, that's the most we can lose, no matter what. And then up here is the most that we can gain. And we can actually look at the single option too. The most that we can gain is just literally just keeps going up. But go back to our vertical. So these are really nice graphs, I think, for the Webull. So pretty much like that. So our strike is $1,000, and then so we're buying this $1,000 and we're selling this $1,005. Now we can change this because it really is only $135. This is really cheap. You know, we're not going to make very much money. Remember, the maximum profit is $365. It's $135. So you could do that. You could do that if you only want to put $100, but that's it's pretty low. So we can change the width. So check this out. Let's sell the $1,000 and the $1,000. Let's keep selling 1,000. Let's see, strike. Or we could do like this. And you can customize it a lot of different ways, guys. We could really have a bunch of ways to customize this, different width. Let's move this over a little bit. It doesn't matter. We can change the width. We could do 70. We could do even $100. Could be interesting. So let's take a look at $100 now. $100 width. So let's see. Looks like we have the strike is, we're buying the 1025 and we're selling the 1125. So that's $100 width. So now the maximum, let's go ahead and look at this. The max loss is $24.42, and that is, keep in mind, that's going to be how much it costs for this contract, and that's the most we can lose. And then up here is the most we can gain. It's never going to change. It's always going to be like that. Once Tesla hits 1125, that's what we're selling. That's going to be the most we can make. And how much is it? It's going to be, let's just look down here. It's clear. Max profit is $7,558. So basically it's like this. This position is going to cost you $2,400, and that's the most you can lose. And then the most you can gain is $7,500. And it only costs you $24. And this is going to be a lot cheaper than just buying the bull calls. Now we can just really play with this. Let's do, it depends on how much money. You can take positions like this. And also keep in mind, guys, this is going to be something I need to mention. If you don't have access to this, let me go on my Twitter. I posted a picture. The different option trading levels, you need to ask your broker and apply. Not everybody is automatically can trade options. Level 1, if you can get it, is only selling the covered calls and the covered puts, which we have made videos on that. Go back on the channel and check that out. But you at least need to do anything really interesting. You need to have level 2, and that's going to be just buying the calls, buying the puts. All right. And covered calls and covered puts is selling the calls and selling the puts. And 2 is buying calls, buying puts. Those are just normal bull calls. And then level 3 is spread trading, and this is what we're talking about. For level 4, we can have another video later about that. Anyways, so let's go back over to Webull. So you need at least level 3 to do this, which is no problem. And actually, Webull approves very, very, very fast. And it's really simple. You just go online and you ask for it, answer some questions, and you can get it. And their customer service is very, very, very responsive. Anyways, so that's pretty much it. And let's just go ahead and play the $30 width. So that's going to be 1020 and sell at 1050. So that's $30 one contract. So that's going to cost us $775. As you can see, the limit price is, and then the most we can gain is $22.25. So you guys can play with this, but $775 for a bullish position on Tesla, possibly You know, that's about triple. That's about 300% is the most you could do, which is really good. But keep in mind, if you want to fork over that $19,000 just for the $1,000 leap, $1,000 strike for the leaps, I mean, you can make a lot more than triple. You know, so that's really interesting. Make a lot of money in that, but those are really expensive. And we can go ahead and look at Amazon, because that's another popular one that's expensive, although I wouldn't really recommend this right now, because if you look at the chart, it's really flat. There's other option strategies you can do for this. Straddle, strangle, butterfly, condor. I mean, there's a lot of things that we can do. And we're going to make videos about those later. But for now, let's focus on this. Go back to the table. We want to delete this. Let's go look at the Amazon leap. 345 days. So let's see. Price right now is $3,300. So let's go up to market. Here's the market, 33.50. And let's say we want to do a 30. Let's do a shorter one. Let's do a 35. 35.50. So we buy the 35, we sell the 35.50. You see, buy and sell, one quantity. So this is going to cost us $1,950. And this is expensive, more expensive because it is closer to the current market price. But of course we can play with that, so let's go ahead and head over to the graph. I like the graph on Webull, it's really nice. And we can change the width. And remember, we had this at a 50. My Webull is slow right now. I think my internet connection is not good. Well, that's okay. We can get a basic idea of what's going on. You guys can play with this, set different limit prices, can try to get cheaper deals on these things, which I always recommend. The most we would do here is max loss is $19.50 because that's how much it costs. The max profit is $30.50. So we can always adjust this. But nevertheless, you guys can play around with that. So that would be how much it would be on the Amazon for 50 width, about $2,000. Max profit would be $3,000. So that one's not as good, but this is closer to the market price right now. But we can always look at the single option at a 3,500 strike. We want to buy it. This is going to cost you $40,000. So, you know, it's much cheaper. But the further out we would go, the cheaper, even cheaper it would be if you think $2,000 is expensive, which it is expensive. There's no need to go $2,000 in one position. Even for me, I have a decent account that I've built up, but you know, I have some positions I have big, some stocks I have big positions in, but you know, there's no need to not take smaller positions and diversify, which is always a good thing. So yeah, it's a really big difference. So anyways, guys, if you have any more questions about that, let me know in the comments. Hit me up on Twitter. I think I explained it pretty well. I mean, if you go in on Webull and use their graph, you're going to have a really good idea of what's going on with their graph. It really lays it out. And this is the same as it was on our example that we used over here. You know, it's the same. And you can see the break even and everything like that. That's why Webull is really good, guys. I'm going to put a link in the description. They're doing they're giving away 4 free stocks right now. And including one of those could be Facebook. So, I mean, you guys should definitely check that out and go ahead and sign up. And really, if you want to follow along with my channel, because I post the live trades on Twitter every day when the market opens. I'm thinking about doing a live stream when market opens as well, but we're going to see how that goes. I'm pretty busy as it is right now doing these videos and stuff, because I'm not really good at editing these videos, and it takes quite a while for me to do that. But yeah, and we post a daily market analysis on our website, so you guys should check that out. It's prostockadvice.com, link in the description. And yeah, the live trades on Twitter, and we try to do a lot of these educational videos. And of course, if it's not enough for you guys and you still have a bunch of questions, just feel free to hit me up on Twitter or social media like Reddit, or even just email me from my website. I'm happy to answer all the questions if I have time. It's no problem for me. I really want to help you guys succeed. and make a lot of money. I mean, it's not that hard to make money because there's so many things that we can do and play it safe but still make money. I really think that's going to be the goal. I mean, first of all, it's going to be capital protection because we don't want to lose our money that we started with. Everyone works hard for their money, so we don't want to do that. And then the second goal would be growth. And I really think that's just what the basis is. So if you guys have more detailed questions, then always remember that I do the one-on-one coaching. So if you're interested in that, send me an email and we can discuss. But anyways, guys, I appreciate you as always for tuning in. Go ahead and hit that like button. It really helps me out. Give me a sub. I post a bunch of videos here, and see you guys on the other side. Peace.